Hey everybody, welcome to this week's neutral strategy. So we're going to be putting together the SPY and QQQ setup for this week. The idea here is I put together this strategy years ago, and it's primarily for traders who do not have the time to be in front of their charts all the time. So you can watch this video, place the levels on your charts, have your alerts set up, and just kind of go from there and trade. We'll get a little bit more into that into the next few minutes. So the first thing that I want to do is I'm going to show you how I'm setting these up, right? And then we're going to talk about the setup and everything. And I want you to learn from this and also have some confidence in where I'm getting the levels from. So I'm using supply and demand. I'm using Fibonacci's. And in this case, where the market's at all-time highs, we're using Fibonacci extensions to find targets to the upside. Okay, now typically the market's not always at all-time highs, and so we're using structure for supply, but we don't have any supply because, again, the market's at all-time highs. Let's go ahead. I'm going to go over a couple things that I did so far. Is I found an inside and out formation here, and I have an inside and out formation here as well. We're going to pull this one right to there. The ES and the SPY and the QQQ pretty much looks the same. I want to look at, I'm pretty much looking at like the last 2.5, 3 weeks of data here. I feel like this will be, sorry, not 2 to 3 weeks, but I'm looking for this trend right here is what I'm primarily focused on. Remember, like if I were to say put Fibonacci's from here to here, that means that I'd be looking for a much longer type of trade because we're only looking to trade this into next week. I don't want to use too many candles here. All right. Now I like this structure right here because it's worked so far really well. Yeah, I just like this trend. So I really want to see off the weekly, what can I use? So I know that if the 23.6 and the 38.2 of this rally that I selected that started back in, it looks like July, August timeframe, I know that this is a really strong support level because the bullish channel tends to work really well. We know that. So I'm going to go ahead and place a line at the 23.6 to get us started in this blueprint. All right. So that's a key level for me. All right. That's a key level for me if we get a pullback. Now you understand this is pretty far away. So this is not going to be like our first target to the downside. Okay, this may be our third or fourth target to the downside, but we know that's an important level, and we want to be using levels to the downside that bounce, right? Because I want to be in a short, and I want to get rid of my short where I think the market's going to go long. Okay, so remember, our levels to the downside have to be levels we would also be willing to get long. That's how you become a good trader. You know where to short, and you know where to get long at the same exact time. Okay. All right, so that covers the 23.6. Let's go ahead and take that off. Okay. Now, again, we're using data for quite a few weeks here. Now I'm going to come in here and I'm going to use this move that just happened right here instead of this whole move. Okay, and I'm going to do the same thing. I'm going to use this area. So I'm going to take some Fibonacci's, my Fibonacci tool. And it doesn't have to be perfect, but I think I kind of missed the, yep, there we go. All right. And so I'm going to do the same thing over here, just like that. And I'm going to find the 23.6 again. Okay. Be right there. And right there. All right. And let's go ahead and take these off. All right. So this is 499, that's 493, this is 585, that's 579. Cool. And now from here, I think we've done enough as far as the weekly is concerned. We found like a demand zone. We put these on here. We don't have to have these on here. I just want you to be aware where some of them are in case we get a dip into there. You could look to go long. All right. So now what I'm going to do is take the weekly and we're going to drill this down. So we're doing a top-down approach to figure out this week's blueprint. So here's our daily. And what do we notice as soon as we come into the daily is we got a bunch of gaps, right? And these are hard because a lot of traders that focus on gaps, I remember when I first started trading, you know, people would give me all this nonsense like, hey, this has a percentage of this being filled, and all gaps are filled, and it just really like analysis paralysis, man. I tend to use the old 23 and 38.2 of a range. If it breaks down, then I don't want to be in the trade, and we're probably looking for a gap fill. I try not to overthink it. So now when I break it down into a daily, we have a really defined range that we can work off of, right? So remember, we use these from a weekly, but now I have this right here. So this is where the rally started. Okay. 1, 2, 3, 4 days up. Okay. Started, boom. 1, 2, 3, 4. Now this is an inside and up formation, which is what we teach to find demand zones. Okay. So I just copied that little demand zone because I'm going to bring this up. This is important going into this week, because if anything were to happen bad, this would be a great area for me to go long. So I'm going to go ahead and identify that. And I'm going to do the same thing right here. And I could have copied the other one. I'm just doing it again just so you guys can see what I did. Okay. So that is a green. And to copy these, remember, you just click on them, hit the space bar, and boom, I got myself another box. Okay. All right. So this is a demand zone. And so what we could do, let's just go ahead and identify this one. And we're going to do it just like that. Just like that. And my weekly edges, so this is where my weekly edges are. This is pretty insane because we had such a big move. That's a really wide space there. Okay. Anyway, it's pretty cool because our weekly edge is where it's supposed to be in a demand zone. All right. And then, okay, then I have this as well. And I'm just being a little OCD here. I'm going to pull some of this stuff over so that we're in line. I'm going to do the same thing here. This one's too far over. That's close enough. Okay. So now what we are going to do is we are going to measure where the rally started. And I teach Fibonacci as well, and I'll probably do a class this year as well around Fibonacci, because you may anchor yours differently than me. I have a special way of doing Fibonacci. All right, and so I'm going to place those there. So this is not where I'm going to go deep into Fibonacci. And then remember, we're finding the 23.6s. I'm going to do the same thing here. I'm going to find this one. It's not the same way every time. I get a lot of questions like, if I could reproduce this, I would create an indicator, but it changes. And this is why I sit down and have to do this every week. Okay. And we are going to place the 38.2. And now while I'm doing this, I'm just taking note to see if there's anything that's really, kind of really sticking out. And there's not, besides gaps, there's just gaps. So we have a lot of lines so far. Don't worry, it's all going to come together soon. All right, bunch of lines. And then we have a high. And what I like to do is just kind of eyeball it. I really just go above the high. Just give it a little bit of grace. You don't want to be touching right at the candle. So like this high looks like it came in around 515 and some change. I'm just going to go a little bit above it. Not too far. Let's just see. Yeah, 514. Yeah, I'm giving it, give it about a quarter or so. So that's what that looks like. And then we have our trendy edges. So I'm going to put a line there. All right. So you're probably like, holy cow, that's a bunch of lines. What are we going to do? Boom. This is my neutral strategy. This right here is called a neutral zone. Okay. Again, if you want details on why I do the things I do, I have videos out there. All right. So this is going to be my neutral zone, and we're going to title it neutral. Okay. It's going to look like that. And then we're going to make this one green, because if it goes over, we're looking to go long. And if it goes under, we're looking to go short. Okay? Just like that. All right, so same thing up here on the ES, or on the SPY. Sorry, this is like my 5th video today. I'm gonna come up here and I'm just gonna go, I'll probably like round it out, go a little bit, around 600 or so. Again, it doesn't have to be perfect. I'm gonna use the trendy edge, boom, just like that. I am going to go right here, and same thing, title this neutral. Okay. And then we are going to make this one green. This one red. And I always have done that because green just like kind of makes me want to go long and red goes short. But while we're sitting here, a little bit of information behind it, if this is your first time, a lot of times what happens is that any level I'm using to the downside is support until proven otherwise. Any level to the upside is resistance until proven otherwise. So if we're going long, we're trimming at any level to the upside and pulling those stops up. If we're going short, see, we've identified using Fibonacci on several different time frames and different ranges, and so they are support until proven otherwise. So you want to be able to trim that if price comes into there. So the green, where I was going with this, is the green can be a little misleading right at first, because if we pop up in here, I actually expect it to break down. So I like to see a little build up, and then boom, we break above it. Okay, same thing with the red. You'll get anxious and you'll want to go short here, but we're placing this at a trendy edge, and when price is above a trendy edge and it comes back to it, we're actually looking for a bounce. So remember, in my teachings, for an advanced trader, if you're gapping down, say we gap down tonight and we happen to be right here, I'm actually looking to go long. Like, my sentiment is I'm going to go long and I'm looking for the bounce. Okay, it's not until we break down underneath and then we show that we can't get back above here. Okay, so a lot of people, all right, I'm going to give you 2 different scenarios here. Aggressive, we break down, you just go short, stops go above here. Okay, so remember, this is a lot wider than a normal like PMZ, but the idea is like a PMZ. We're using a neutral zone. I want you to stay neutral. Aggressive traders, or advanced traders, I should say, can get busy in the box. It's all good. But this is for the type of trader who, again, just wants to kind of set and forget the trade. Okay. So a couple things to take into consideration this week about this setup so far is that this is very aggressive to the upside. It looks a little on the extended side, as you guys would probably all agree, but it doesn't mean that price has to come back down, but be looking for signs for price to come in and digest. Okay. Could be that we just digest this week. I don't know yet. We're going to have to see how the futures open up tonight. All right. But if it wasn't for the election and it didn't feel so bullish, I would say that we need to come down and digest. Right. But with an election, this could continue to move to the upside and just melt up every day, and you get like small pullbacks. So we need to be very, very flexible here. Okay. So far we have a couple levels here. These levels are very far away from each other. And so in saying that, for this week, I want you to be aware of where the gaps are. The reason why I say this is because let's say we get short, okay, on the Qs, and it's working out really, really well, and you're making money, and you're just like, hell yeah, I can't wait until it hits 504. But what if we come down into the gap and then we just barely hit the gap at 505.5 and shoot all the way back up? You're going to be really mad that you didn't take some more profits. So even though some of these are pretty wide, I want you to be aware that we have gaps. Now this one, this is far, 88, 89, 90. Yeah, this is kind of far. So what I'm going to do is I'm actually going to place another line right there, okay, at the gap. And this one, it's not too far from the gap, and I'm not going to put a line right here because it'd be sitting right on top of this. So we're going to leave this one for right now. All right, for right now. Things could change here in a second. All right. Now, how do we get targets to the upside? We do Fibonacci extensions. Okay. Now, for me, this is if I were to come down here and place my Fibonacci extension from where the rally started, and I come up to the high and I double click, we're going to get these numbers up here. So let's go ahead and do that. Okay, this is where the rally started. This is where it ended. Let's go ahead and double click, and this is our numbers to the upside. So what I want to do is I'm going to take my dollar sign. This is going to give me the price line. I'm going to come up here and pick this one, just like we did on the long range to the downside. I'm going to pick these. Now that's really far away. Well, it's not that far away. I shouldn't say it's that far away. And then we're going to come up here. Okay. This one is though. 606 is pretty far. All right. So I need to go with a closer target. So I'm going to come to the gap right here where we originally gapped up. I'm going to double click, and that's still close. So I'm going to take that off. I'm going to take, let's try when you've been doing this a long time, you just realize like something's too far away. There we go. I'm going to use this guy. So this is going to be our first target. Okay. To the upside. I'm going to actually pull this up just a tad, about the 50. And then we are going to use, I like this one. There's a double stack, 38.2. I'm going to go right there. These are going to be the 3 targets to the upside. Okay, just like that. Couple things I want to check. Let's go back to the weekly. All right, I want to get, let's try the 4 hour. Okay. I'm gonna go over here. Let's go to the daily. Good. Let's go to the 4 hour because we got to come back to the 4 hour here in a second. So these look pretty good to the upside, 602, 606, 611. And while I'm sitting here, I want to check on my other charts what the ATR is on SPY this week. See if I can find that. Here, actually, let's minimize this. Let's put the SPY in here. There we go. So the weekly ATR is about $14. You know, I don't think that they'll continue to be this wide, but it's about $14 on the SPY. All right, so 611, you know, that would put us at about 13. I think that's good enough, honestly. If we get over 611, that's cool. Just stay long as you can stay above the 4 hour cloud. You know what I mean? Or the 30-minute cloud, whatever you want to do. Just tighten it up and stay long above your EMA, your 9 EMA. But I like these targets. So this is about, you know, again, this is about $13 from where we closed after hours. So we're within the ATR. And if we were to go down 14 to the downside, you know, you're looking at 585. So that puts us right around this 4th target. All right. Now, notice when I put on the 4 hour chart or the 4 hour time frame, now I'm looking at, I could see structure. See, you can't see structure in here. So I'm using structure, and now I can see what's going on. We have a demand zone here. Okay. So about right here. I'm going to bring this guy up just a tad. See, it's right here. So I want to go right above that wick. So that's going to be my first target to the downside. And basically what happens is if we pull back into here, we have a lot of 4 hour structure in here. Now I want to check these and see how they line up with the structure over here. And I love this. This is perfect. So I'm going to actually take this off. I love these targets. Remember, these down here, don't really pay attention to these. I mean, if something bad happens, sure. But really, my neutral strategy typically only has anywhere from 3 targets to the upside, 3 targets to the downside. A lot of traders like to use my T2s as iron condors. Now, if this is your first time looking at my neutral strategy, do some testing for yourself, get used to it over the next couple weeks, but this is what I want you to pay attention to, okay? It's just the process. But if you want to use condors and stuff like that, feel free to, okay? But I like the structure over here. I love this move out of here. If this doesn't hold up, I would expect no matter what, if price were to come down here, I would expect a relief bounce. And if you want to learn 5 minutes, that's all it is. The video is like 5 minutes on how to trade a relief bounce. It's on my YouTube channel. Okay. So again, I love this structure. So this is what I'm going to say. If the SPY comes down into T2 to T3 this week, this is where I expect buyers. Okay. All right. So if you're shorting, this is for me where I'd be covering if we break down under the red. Okay. One thing I love about the 4-hour too, we're going to zoom in here. You're going to notice that the trendy edge, the level that's telling you, hey, if we close under here or if we break under there, go short, is also confluent with trendy edges and the 9 EMA. And there's a trendy edge under here. So I would expect it to bounce. Okay. So aggressive traders, advanced traders, you're looking to trade a bounce off of this if we get there. All right. Over here on QQQ, we have not changed the time frame. We're going to drop that down into a 4-hour. Boom. We start seeing structure. Okay. So we have the inside enough formations here. I want to see how my levels look. Go just a little bit down. I want to check this. I'm going to leave that. And I'm actually going to pull this one up. It's right here. You can see it's above that zone. Okay. And so let's look at the ATR on the QQQ. ATR stands for average trading range or average true range. And our ATR is about $18. So we do this after, just so you know, I do this after I put any of my blueprints together because I don't want to see the ATR and then go, oh, because your mind is a tricky thing. In the back of your head, you're like, oh, it's got to be 18. So then you're like trying to like force levels, and that's not the way that you want to do this. Okay. All right. So 18. All right, guys. So if we were to add 18 to this, you're looking at about 532, right? So that's going to put us, you know, this bad boy will come all the way up here, which would be about 618, which I'm going to be honest with you. It's funny because a lot of people feel like things are stretched out, but man, when it comes to the Qs, they've been stuck for so damn long that I'm like, they're just starting to break out, guys. So, I mean, it could be the case they just started to break out and then they digest for a bit, but if they keep going, I'm not shocked is my point. Okay. So, the only thing that I don't like, we're going to probably have more than 3 targets to the upside because I feel like 515 to 532, it's quite a stretch. This target one is too damn far away. And when we've had a really bullish market, the momentum can carry us up. But I don't want you going long here and then waiting to trim $6 into a move. Like, that's crazy. You know, that's a third of the ATR. So we need to have a T1 that's a little bit safer. I've been doing this a long time, not saying it's going to happen, but the probabilities on these type of moves is the momentum will catch a lot of people off guard and they'll get a lot of FOMO, and then all of a sudden if you get that breakdown you can get smashed. So I want to make sure that we're taking profits. You can do something like, say you get long over 515 and a quarter, you could look to do it from a percentage scale. So you know you don't have a target there, but you're going to say, hey, I'm going to take some of this off at 50%. You know what I mean? And that might be 517. Just kind of depends on what strike you are buying. Now, for me personally, I like the idea of just buying at the money or in the monies. If you want to go out of the money, just pick a couple strikes out. But it kind of hurts you. Let's say that, you know, this happens and you get pretty bullish and you're like, well, I'm going to buy the 520s. And then we get a pullback. for 2 days and we're still in the neutral, these decay very quickly. And then by the time you get the move, you're right back to break even. And I just don't like that. Okay. So I like the at the monies or in the monies for this strategy, but you're happy, you do what you're going to do. Again, you could use the T2s, target twos for your iron condor. For some reason, we break down into here around T2 to T3. I do believe buyers are going to show up here. So just know that if you're short, these look like great areas to cover those shorts. Also, there's going to be a time when I come in here and I'm dead wrong. And we have a catalyst that can break all the way down, and you'd be super happy if you followed the strategy. You may also trim or close, and then all of a sudden it's like, oh man, it just kept going. What if I just would have kept it until we got to the demand zone? Look, there's nothing wrong with trimming some and keeping some. Trim some, keep some. All right. So on these setups, the idea is you go short, your stop's above here. So if you're one of those people that can't be in front of the screens, this is where it benefits you, because if this happens, all you care about is being alerted, meaning like on your phone, what I want you to do is I want you to set alerts. So if you're going short here, like you should be setting an alert. You create an alert and you say at or below, and then you put in here short setup. Okay. And this is going to hit your phone. So you're going to create it. Okay. Right here, you're going to create an alert. You do this for both sides, guys. At or below, trim. Okay. Just like that. Right here, you could say create alert, at or below, trim, look for buyers. I don't know if it'll let me type all this in here. Okay, there they are. Right here, create an alert at or above. Okay, long setup. Whoops. Okay, just like that. All right, and you're going to do this over here as well. Now, another thing is taking advanced trades. You can right now on Sunday, which is incredible, set up your trades to be automatically taken without you even being in front of the charts. Okay. Now, disclaimer, if I teach you how to go long above this level without being in front of the screens, you need to pay attention to the futures. You know what I'm saying? So for example, on the ES futures, this is 600. Okay. We closed at 598. For every 10 points in the ES futures is $1 in the SPY. So if you came in here on a Sunday and said, okay, I'm going to program my option to go long greater than or equal to 610, and you're not paying attention to the futures and they're up 40 points, that means you're up here at 602 and you didn't change your automatic buy. That means you're going to buy this when it's at 602, not 600. So please pay attention to the futures. Very, very important. But what I can do is, again, create your alerts here, guys. Okay. Whoops. At or above. Long setup. Okay. Now, again, reminder on the red side, although I'm saying short setup, remember those levels we're supposed to see a bounce. Okay, so you want to see the bounce, and if you want to short it, you're going to short it when it bounces up. Remember, it's better to buy puts when the price is moving up, not when it's moving down. Okay, so that bounce happens, you wait for it to bounce, and then you get yourself a better price, and then you look for it to roll over. Okay, so short setup. You can tell if it's aggressive. If you've been trading for a while, you can tell what at or below. What is aggressive? You can just feel it. Like there's bad catalysts out there Things are looking so ugly. The trajectory of the move is sharp and ugly. You know what it looks like. Like there's a difference. Like if things are here, let me take it to a whiteboard. If things are just kind of doing this, and then they're doing this, then they're doing this, then they're doing this, and you got this red line that's right here, and then it's doing this, and then he almost gets there. So this is lame, okay? This is the kind of, I don't feel aggressive with this, so I'm looking for this. Then as it gets closer to this high or this pivot, then we're going short. Boom, go short, and then we're looking for it to finally break down, okay? If price is coming, say we had the red level, let's go back to the whiteboard. Say we had the red level for our short. If price is doing this, then yeah, I'm trying the aggressive approach. Like I'm not going to wait. As soon as it breaks, you know, you could wait like right here, you know, let it break and then boom, it bounces back up, boom, go short there. And then you're looking for that to turn into resistance and then that happens. Or if you're like me and you're just like, whatever, I'm going to go short because I'm following my process, then I just go short, okay? All right, guys, so one thing that I didn't like over here is this was too far away, so we're going to find ourselves a different target. So I'm just going to find a range here. I'm going to double click. I'm going to use, actually going to go really close with this. I'm going to go with 517, okay? So 517.46 is going to be the first trim there. So this is the neutral strategy. I know it looks like a lot, but that's okay. This is why I do it. I'm just teaching. All you need to focus on are these levels, the strategy. And again, if you have any other questions about it, you could go over to my YouTube page and you can watch it and get a better understanding maybe, but it's really straightforward. The next thing that I want to show you really fast is, let's go into, you can, and I have a video of this on YouTube as well, you can already set these trades up in advance, and this is the advantage. Okay, so I can pull over, let's go right here. By the way, that was a great NVIDIA trade, guys. So we sold the calls for 100 and something %, and then we bought back the short, and we got this on just in case there's some like catastrophe in the market. But this is all free. It doesn't even matter. We've already paid for the trade. It made money. So if we come over here and we go on SPY, and I'm going to encourage you, I'm not going to spend a lot of time here because it's already almost 4 o'clock in the afternoon. I teach how to put on trades before the market. You can program your options, and it's the word program, it's probably not the right word. It sounds a little extreme. So we want to be buying in weekly increments. Unless it's a short week, I want you to buy the next week. So it's not a short week, it's a full week. Expiration happens on the 15th. Okay, so you can see right there, boom, there's the 15th. So if price were to hit the 600 level, then we would be at 600, right? So I want to be buying, remember I said at the monies. So what I do is I come over here and go to buy. Let's just say single, okay? And then we're going to click this thing right here. This pops up, okay? I'm going to buy whatever amount that I want to do, okay? I can use quantity, I can use percentage, and I can use dollar. So let's say that you have an allocation and you're like, okay, I'm going to try the neutral strategy, but I'm only going to spend $1,000 on this weekly, okay? Then you would put $1,000 in, okay? So totally up to you. Or you can just do it by the number of contracts. I really like the allocation, because if you put the allocation in, it's only going to buy how many you can afford, right? Instead of you kind of like FOMOing or something like that, you can already tell it. So let's just say I'm only going to buy $500 worth of the SPY when it gets above $6.10, I think is what it was. So for me, I buy at market. This is the only way to do this, by the way. We're going to do market because it's tight anyways. I'm not concerned about a spread on this. And if I was only trading with 500, opposed to 50,000, then it's really not a big deal if I buy this spread, to be honest with you. So the next thing is GTC, good till canceled, right? And so it's going to stay there. And then the beautiful thing about this is right here, we're going to fill the blanks in. You're probably like, what blanks? Well, they made it to where they don't want retail traders to even know about this. I remember my first call when I was discussing this with a rep, they didn't even know about this, which I thought was really funny. So when we scroll, see how that pops up? So if I click, it automatically populates SPY. And then right here is the method when it's mark. When we say mark, where the price is, where the mark is, okay? And when it's greater than or equal to, folks, if it's been a long time that you've been in school, please understand what greater than and less than is. Less than points to the left. Greater than is pointing to the right, okay? So it's greater than or equal to the number that is on my broad market, my neutral strategy. So 600, let's just say 0.10, okay? So I hit enter 2 times until this comes out of there. So now it's all loaded in there, okay? And then I hit save. All right, so it saves it. And then when I come over here, I hit confirm and send, and you have to read it all out and make sure that it's reading, let me see, that it's reading the right amount, okay? Now for privacy settings, I'm not gonna pull up my account information here, but when you hit confirm and send, you need to read it out loud, and it's going to read something like, execute the 600 call that expires on 15 November when the mark is greater than or equal to SPY 600.10. You have to read these because we're human and we mess up things. Once you read it, then you agree to it, you hit confirm and send. And what's going to happen is on your book, okay, or on the chart, it is going to show up. So let me recreate that one more time and show you what that looks like. So let's go over here. I know you can't see this while I'm talking. It's going to pop up on the screen, but I want you to understand. Okay, well, actually, it is going to pop up. So we'll just do this. Boom, boom. And greater than or equal to. Let me just double check that number. Yeah, 600. I'm kind of superstitious, so I'll just go up 1 penny. It's weird. Anyway, so right there. Boom, market. Good till canceled. Right there. So buy 5 contracts at market, good till canceled, when the market's greater than or equal to. Save and confirm and send. I read it out loud, and this is what it's going to look like on your end. And actually I could cut and paste this so you guys can see it. Okay. And it should say buy 5 of these. Okay. Buy 5, 600 call when the SPY is marked at or above 600.10. Okay, and this tells me how much it's going to cost. Now, if I agree to that and I hit send, that's what's going to happen. This thing floats around until this is executed. And what's cool about it, everyone, is that if we break down, then these never get executed and you're not over there FOMOing. Now, the same can be true to the downside. So let's say 595. So 596 is, I'm going to create, or I'm going to buy these puts. So now I'm going to load the puts. I'm going to buy 5 of these at market, GTC, symbol, method, less than or equal to what? I'm going to go 595.90. That's just how I roll. 595.90. Enter a couple times. Hit save. Let me go ahead and read it. Buy 5 SPYs when it's marked at or below $595.90. Okay, and if I like it, I'm gonna hit send. All right, so right here on a Sunday, I literally don't have to do anything else. Okay, now my video that is on YouTube is much more, there's more information, and you can actually set these up to have trims and to have stops so that you completely are disengaged from the setups. And guys, I'm telling you, this is the beauty of supply and demand, or any strategy that I'm showing you, is that if you come in and you have your homework already placed out before you, before the week starts, then you can get long and short without all the butterflies that you go through because you're watching price on a 1 minute chart. Now, if you have not done this before, I would say try it on your paper trade account before, just to make sure you're not messing things up. Okay. But this is the beauty of supply and demand, because most of the charts that I present to you guys, they're already like done for you. That's why, and don't take this personal, but this is why I don't like when people say, "Oh, I missed it." It's like most of our trades, you could already have this in to go long. So when we wake up in the morning, for example, like an SPX, when you wake up in the morning and I tell you, "Hey, I'm bullish," and we have a zone on the premium chart, you can already get engaged. Like, you should already have, if you're okay with it, have a trade that's already getting ready to go long in the zone. You know, like, you already understand what your risk is. And if you don't understand your risk yet, then wait for the 14th when we go more into detail about things. But anyways, guys, this is how you set up the trade. I don't normally in this API account, or especially here in SPX, I won't be alerting any of these. This is just for you to take advantage of and see if you like the strategy. And if you do, awesome. I've been doing it for a very long time, and we have a ton of people that love it. So if you like it, cool. If you trade it, let me know how it goes, and report back next week. All right. You guys have an amazing day, and we'll see you soon.